Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. Over the last few months, prices have utilized the medium moving average, currently at 82.93, and highlighted in mauve on my daily chart as a sort of a base to push and test higher. However, the top side has been capped, well, sort of, by three separate, though not necessarily unrelated resistances. The first resistance was the April 2012 high at 86.65. This had been breached in late December 2023, but we only had the single close over it, which brings me to the second resistance. This is the extension to the upper trend line of the June to August ascending triangle, currently at 87.48, which is highlighted on my daily chart in dark blue. This has not been tested this time around, but it is still there, and it relates to the April 2012 high, as back then when it was created, it was caused by the same April 2012 resistance. The third resistance is unrelated. It is the purple colored neckline on my daily chart of the February to April 2023 head and shoulders continuation pattern, currently 86.29. This was likewise penetrated in late December, the same as the April 2012 high, but again only had a single close above it, and more recently, due to its declining angle, has helped cap last week and this week's action, along with the 50% Fibonacci line of the October 2020 to March 2022 move at 85.56. Now, I'd also consider in the equation the bright green highlighted neckline, currently at 81.24, of the January to April 2023 reverse head and shoulders continuation pattern. This showed the bearish angle of attack in July through to November last year, and then helped the medium moving average to support the market in December. Though since then it has moved away from the market, so I may roll down its intensity next time. So where does that leave us, apart from being in between the medium moving average below and various resistances above? Well, we have the opportunity for two possible pathways leading to two possible patterns. The first, we could look at the action since the lows in October late last year, last year to date, as a possible bullish halfway hesitation. It is a ragged pattern and a little too long in duration for my liking, but it could become that if prices punch higher and up through the resistances. The second is to look at the action since mid-November 2023 today as a possible head and shoulders pattern in construction, with the medium moving average acting as a de facto neckline. This is possible, but if it is, then we are in the construction of the second shoulder right now, and prices need to drop back down to the neckline zone to build the pattern. As an addendum, we might be forming some other patterns, such as a declining triangle since late last year, but it's way too early to say if this is an option. So we'll just have to wait and see, though it may take a while, as the purple neckline only draws close to the medium moving average sometime in the summer this year. LME 3-month aluminium. This is, well, there's a lot going on here, whether it be the gapping move higher in December last year that led to the monthly key reversal up for bullish halfway hesitation in the middle of the rise and horn top at the end of the rally, to the subsequent drop, which was halted at the October 2022 base support at 21.56. That caused a rise last week up through the two necklines of a pair of reverse head and shoulders continuation patterns. One from February to April 2023. That move currently at 22.29, highlighted in bright red on my daily chart. And one from June to July 2023 move, currently at 22.59, highlighted in bright green on my daily chart. All these big moves have led to where prices are now sitting just over the 50% Fibonacci line of the big December 2023 move at 22.55. And they were just under the October 2018 high at 22.67, but we've moved back above that as well. So with all these big moves, where does that leave us now? Well, there is one pattern that has just completed its construction late last week, and unusually all elements are in the right order. Last Thursday, the market made a bow tie formation of the declining short moving average, currently at 22.21, the very slowly rising medium moving average, currently at 22.30, and the more or less flatlining short medium moving average, currently at 22.28. As I said earlier, the moving averages went into the bow tie in the right order and have exited it more or less in the right order. However, there is no clear direction from the moving averages, with one pointing downwards, one sideways, and one sort of higher. This makes the immediate impact of the bow tie crossover difficult to interpret. Is it bearish or bullish? As I say, the immediate answer is unclear. However, we can look at the longer term process for this bow tie formation. Thus, the theory goes that between 15 to 20 sessions after the crossover, the market will see volatility, and in theory moves in the direction of the moving averages, assuming they become clearer by then. Thus, I would suggest paying close attention to what happens here between the 15th to the 22nd of February, as it may indicate the next significant direction. LME 3-month lead. In mid-November 2023, the market reached its recent zenith at the same high we saw in August last year, just over 2,300. Reaching and passing through the primary target at 21.85 and the secondary target 22.70 for the break above the mid-September to late October 2023 bull channel, before turning around and dropping even faster, back to new lows not seen since June 2023, and in the process leaving behind a V-top to complement the earlier V-bottom. This time with a substantial extension from early December last year until last week. This extension ended up being a bull channel, currently 2065 to 2138, which is highlighted in blue on my daily chart. I said back some 7 weeks ago, and I quote, "We have some mild congestion from October," that is October 2023, "we have some mild congestion from October in the 2090 area, but we really don't have that much resistance above until we start approaching the moving averages. Obviously, the flatlining long moving average currently at 21.24, as well as the interesting 50% Fibonacci line of the March 2020 to March 2022 move at 21.35, end of quote. Interestingly, it was the crossover combination of the moving averages plus the 50% Fibonacci line at 21.35 and the upper bull channel line currently at 21.38, at what was at the same time a cusp to the market and one of its highest combined resistance levels that saw prices punch up through all of those resistances and hold station over the next 50% Fibonacci line above that, which is the November to December 2023 move at 21.62. The next resistance above, and another possible holding level, is the lower trendline extension to the May to June 2021 descending triangle pattern. This trendline extension helped cap the market in June last year, as well as July and part of November. But on the recent move lower late last November, well, it didn't even register. So I'm cautious about it being a strong resistance. I even have a sneaking suspicion that prices may turn around and move back down into the broken bull channel. But we'll just have to wait and see on that one.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.
you.